Good afternoon, this is Tom Aspray with the Viper Report. It's Tuesday, September 8th, about a little over half an hour of trading left to go, and things haven't started off the new month in a very good fashion. The market was hit hard late last week and tried to rally overnight, but just made it back in the future to the 38.2 retracement resistance. As I said this morning, there's no really signs that this decline is over. Selling has been pretty heavy. We bounced midday, as you can see this chart of the NYSE composite. We got up to 12,809. Now we're back to 12,678. Dow is down 525. NASDAQ composite down 400 points, 3.53%, and the S&P is down 2.4%. Market internals are quite negative, but better than they were in the opening hour. 674 up, 2350 down. This will push all the AD lines negative, as most of them turned negative last week. So what's the story? In our August 30th issue, What Will Higher Rates Mean? I pointed out that the seasonal trend for September is pretty bad. You can see the seasonal chart. Typically, the S&P 500, this is using data back to 1928, tops out on September 2nd, and pretty much is lower in through November. This particular part is of the 2011 debt downgrade, and the market was already tailing off. It peaked early that year. In last Thursday's Viper ETF report, my markets table showed that the QQQ closed at 302.74. That was 1.5% above its weekly start band. S&P was quite close. IWM was not. This was another warning sign heading into Thursday trading, and they didn't take any prisoners for the rest of the week. This is my hourly chart from today's publications. I'm trying to teach subscribers a little bit about hourly analysis. It can be pretty helpful. You can see that we have this is the QQQ. So when the market was peaking on the 2nd, it got right up to the R1, R2 level on last week's pivot, and then turned down. This was the gap lower on Thursday, broke support, and as of ahead of today's action, this little rally here suggested that worst was not over. You can see we're heading back towards the lows, back towards support, from the early part of August. We just are testing 270 and then 266, 67 and 264, 63. A bounce is likely this week. You can see at the highs, the relative performance, line D, diverged from prices. We made higher highs in price, lower highs in the hourly RSI. Divergence analysis is quite important. It tells you things that the financial press won't tell you. The OBV is back to major support, so also consistent with a bounce. The negative numbers on Tuesday has pushed the advanced decline differential down to oversold levels at minus 908. It was even lower earlier in the day. And you can see the chart has some good support not too far below current levels. The chart of the NYSE composite shows we dropped well below the 20-day moving average. Looks like we get down to 12,500 or 12,250. The All AD line dropped below its moving average last week, warning of the recent selling. Not too far above good support here, this line B, and is the uptrend from the April lows. Stocks only AD line was weaker on Wednesday. Some of the AD lines pushed to the upside, but not the stocks only, and then reversed back to below its moving average. This data is not updated for Tuesday's session, so it could drop easily down to this support line D after we have today's data. As I mentioned last time, we've been taking profits on some of our positions on strength. So we sold about 6 or 7 positions, got stopped out of a couple last week, but we kept raising our stops, so we minimized the damage in most instances. If you'd like some specific recommendations, my view now is that we will see a rally. The strength of that rally will tell us more about whether an important top is being formed. Given the strength of the rally over the summer, I think it'll take time before the market completes an intermediate term top, but I'll be following the data as always as my guide. The Viper Report, you can subscribe here on viperreport.com or the Viper Hot Stocks Report, $34.95 a month, 2 reports at least, and 5 trading lessons. Also in the email, there's a link for my presentation to Wealth 365 next month. I'm doing an election special looking at what I've been telling my clients in the past 2 presidential elections and how some of the tools I use have really allowed them to profit no matter who wins. Hope you have a great rest of the week. I'm taking some time off next week, the first in a year, but I'll get back to you afterwards.